traders, so let's take a look here at a symmetrical double top or an SOS style of trade, and then we'll take a look at that and how it turns into a favorable excursion signal. All right, so when you're building out your trading strategy, here's what we look at. Now again, this is going to speak directly to one of the questions I had earlier about different time frames. So we could look at daily bars and so on, but the primary thing that I want to discuss here is how to build strength of signal. Okay, so I'm always talking about SOS, strength of signal. And again, we recall information best with acronyms. So with an SOS4 type signal, we're looking to use the power of chart patterns, and in this case, primarily double tops, double bottoms. We then look to add confirmation using RSI, one of my favorite indicators, Relative Strength Index. Wells Wilder created it. Common is you apply it. The default settings are typically 14 period, and then overbought above 70, oversold below 30. I use either a 5 or 7 period RSI with overbought at 79.5 and oversold at 20.5. That's what you see at the bottom of the chart. So I want to take a chart pattern. Again, visual chart patterns, incredibly powerful because structure leaves clues. We can look left. You can go in and look at daily bars over and over and over and find these patterns all over the charts. Number two, we add relative strength. Now here's an indicator that's a derivative of price. And then number three, we can bring in either market structure and the DSR levels. Okay, so dynamic support and resistance zones based on higher time frames. Now, typically, obviously, price doesn't move in perfect symmetry, but we can take a look at something that's occurred in real time. And the key thing here, gang, is the verbiage. Okay, so every double top or double bottom has a left side. So the left side is the setup side. Okay, this is where I need to see an extreme reading on relative strength. And I'll tell you what we'll do. We'll go in and we'll take a look at a 610 tick chart. So we'll go 610 tick. We'll pull in crude oil and we'll take a look at that trade from yesterday. So we'll go CL0714. Okay, so we'll pull this guy down right here. We'll kill this and pull this in. So as we rolled over yesterday, trade setup identified right here. Now let me go ahead and I'll just remove the DSR levels for now. And let's just look purely at price. And remember, I want you to think about it in sequence. So as a market declines, right here we go extreme oversold. So right here, that extreme oversold produces my first strength of signal. So here we say RSI is oversold. That extreme oversold, 5 period, is less than 20. That gives me SOS1. Now, the first question I ask is, where is price relative to? And this is where we always say, look left. Look left for structure, look DSR levels, whatever it might be. Now, this one here, we say, if we don't have any structure, then it's going to be an aggressive trade. Okay? So we're going to go here. Now, we've got our extreme oversold condition. Now, at this point, we're looking for a retest of that exact same level. So here's the retest of that level. And on the retest of that structure, which in this case is 101.70s, we've got bullish divergence. So you see that the relative strength reading at the bottom is higher than it was previously. So this is identified as strength of signal 2. A, we've got a visual price pattern, which is the double bottom. B, when we test that double bottom, we've got bullish divergence in the RSI. And now again, at this point, we can do one of two things. We say SOS1 aggressive oversold, retested that level with bullish divergence, SOS2. Then the signal can be based on color rotation. In this case, if we're a buyer, our candles are going to go from black and then rotate to white. Okay, so we call this a filter. Very, very simple. We're going to filter out trades where the market just continues to sell off. So as we look at this chart right here, we actually have two examples. So we've got a move here where the market goes overbought. Right here. We look left, we have previous structure resistance. So as you're building your strength of signal, we say overbought SOS1. Where's market relative to? Look left, I'm at previous structure resistance or previous market highs. So that's an additional strength of signal. The market pulls back down, and again, note right here the symmetry. From the swing highs that set the left side, we've got about 9 bars down to the swing low, and then about 7 bars back up. So it's a 16 bar pattern. As we retest the previous highs right here, you'll note we've got bearish divergence on the RSI. So I'm aggressive. I like to sell it right here if we have a DSR level, if we have structure resistance. So use your horizontal line right here to identify. Look left right there, previous resistance. This gives me a clue. So I'm going to sell the right side right here. Let's just give it a 102.35 short entry. So 35, I need 17 for my 18 tick target. There's 102.11. So I hit plus 18 right here. I've got $180 in the bank, and now I can trail. Now, if I'm not aggressive and I'm more conservative, I go overbought, SOS1, at previous structure resistance, SOS2, retest of that level with bearish divergence, SOS3, then I need a black candle right here for the sell signal. That becomes strength of signal 4. This is an additional confirmation. So every one of my winners is going to do the double top and then roll over and make new structure lows. Every one of my losers will do a double top, pull back, and then go to new highs right here. Okay? All right, so we roll over. If I wait for the black candle, I want you to note the difference in the fill price. Right here, we're getting short at around 102.35. If I wait for the black candle close, I'm getting short around 102.12. Now, this is on a 610 tick, which makes it a little bit more dramatic. So I look at it and I say, you know what? Waiting for this additional black candle confirmation costs me money, costs me pips. But also, if this market would have pulled back, my bars remain white, and then it continues the rally, waiting for that black candle would have kept me out of a loser. So it's important to test with both. So from the short entry right here, stay short, and then if you're trailing your stops above the white fib dots right here, obviously you never get stopped out on the balance, and then down here, we've got a buy signal. So now I'm going oversold, SOS1. Where's the market relative to structure? Look left. Man, I look left, gang. I've got nothing over here. So I can't build strength of signal based on market structure. We pull down. I've got a double bottom. That's SOS2, bullish divergence, SOS3. Now, because I've got no structure, I'm going to wait for a color rotation. This bar right here goes from 101.70. It pops 13 ticks. No white bar, no white bar, no white bar, no white bar. Boom, white bar. Now remember, if I'm doing my testing, my best case scenario is to buy the open of the next candle. Next candle opened at 101.96. So we're going to record that as entry. 96 minus 18 puts me at about 78 for my stop. If I put a stop here, I'm resting above my double bottoms. And then if I'm long from 96, once the market goes up 10 is 06, and then 8 more is 14. So price comes right here, plus 18 in the bank, scalping contract winner. Okay, Now again, if I buy the double bottom, I'm long from 0270s, 0272s right down here. As soon as it tests right there, and I've got my bullish divergence, I'm a buyer. So if I'm long from 72, plus 18 is 90. So once the price ticks at 91, I'm out right here. So I'm getting out with plus 18 by the time the white bar or color rotation occurs. So again, aggressive is with no filter, which means no color rotation. We got a better price here, winner. We got a better price here, winner. But there will be plenty of times when I buy it right here, I do not wait, and the market goes here, here, and then rolls back over. We never get a white candle, and thus that additional requirement was never met, so I never would have gotten long and never gotten stopped out. So recording this from the SOS4 sell, again, 235, so we sold them at 102.35. We go plus 18 on half. Okay, and then the balance comes off at the entry price for the next position. So I sell 2 right here. I cover 1 right there. I'm still short 1. My stop is trailing above my fib dots right here. I stay short until I get an SAR buy signal. So I use that SOS4 buy to stop out of my short and reverse to a long entry. Okay, so right here we said we got long at 101.96. So if we were short from 235, 102.35 to 102 is 35, down to 96 is another 4. So we go on this one plus 39. So on that 2 contract position size, we made 390 here, 180 on the scalper for 570 total. And now we're long here from 96. On 96, on the first contract, we go plus 18 again. And again, make sure that the market moves through your profit target by a minimum of 1 tick before you give yourself that fill. If I'm long right there, let's go ahead and let's just tick to the right. Okay, my stops are at the value of the fib dots minus 2 ticks. So this black line will represent our trail stops. Always include your number rounding. My RSI is extreme overbought right here. Okay, so there's the left side. Now again, let me drop this horizontal line in. I'm right back against structure resistance. So here's where you start to build your strength of signal. RSI overbought, SOS1. Listen to the verbiage. RSI extreme, SOS1. Where's the market relative to? I'm at previous structure resistance for the day. That's an SOS2. Now let's see if we put in a double top. Okay, we do not put in a double top. Instead, we pull back. Our fib dots were at 222. My stop would have been at 219. So from our long entry here at 96, plus 4, and then plus another 19, so we make plus 220, or 230 on the other one. So this becomes $410. So on those 2 trades right there, one of them more conservative, this guy, we talked about the more aggressive entry, but even if we use the color rotation on both, it's over $900 trading a 2-lot in crude oil. Now, let's look at the 2618 trade. Over here, if I sell them up here, then I wait for the market to make the new structure low right here. Remember, we have to break the swing low that exists between my double tops. Grab my fib retracement. I take the signal side high, the right side. I pull down to the new structure low where it's broken, and then I look to sell the 618 retracement right here. So did we break below, close below? Yes. We took out this swing right here. Okay, so that criteria met. Number 2, the way I typically do it is I'll put a limit order here, and then a buy stop up here. That way if the market rallies, I'll sell 1, I'll get short a second. My buy stop's already resting above the market. So if we get a big pop right there, I get short, and then I'm stopped out and I'm ready for my next trade. Okay? If not, I get short, the market rolls back over, and as it comes back down, my first target is a retest of that low. And then again, I look for the 127 extension. So here we rallied. Did we get short at the 0220s? We did not. So the 2618 trade did not signal, which is a good news for my short from here, because that means that we continue to just sell off and head down towards either my profit targets or, as we talked about here, the stop and reverse buy. So beautiful sequence of events right there in crude oil from a prior trading session. Okay. Now let's come over here to the right, pull this down. And again, right here. So did we go overbought here? Yes, we did. SOS1. Higher low, did we retest the previous high with bearish divergence? Yes, we did. SOS2. Right now we've got an SOS2 sell signal, but we're on new highs for the day right there. So when I look left, I've got no structure. If I sell them right here at 342, the market moves against me by 8 ticks. Did my 18 tick stop get hit? It did not. If I sell them here at 42s and the market moves down here to 310, did I hit my target? Yes, I did. So again, this gang is way too aggressive, but you still see overbought, higher low, bearish divergence. Overbought, higher low, bearish divergence, over and over and over. Very, very powerful. Then what do? We pull back down. RSI's oversold. So your first clue, gang, is always RSI extreme. Okay, so I set up the indicator to alert me so I can watch it. It's your T2U SOS. I named it SOS because I wanted to get an alert that alerted me, hey, here's the first criteria in your strength of signal 4 signal. Okay, so I right click, left click indicators, scroll down, T2U SOS, and I can set it to the exact same thing. Overbought, 79.5. Oversold, 20.5. And then I use a 5 period. So it's going to produce a black arrow for a sell, a lime arrow for a buy, and I'm going to get an audible alert when the criteria are met. So as soon as this RSI goes overbought right there, bingo, I get an alert. I can place this in the market analyzer, and then I can have it watching and just tracking 60-minute bars for me, 240-minute charts for me. Those of you that are watching this via video, we'll put that on the daily time frame, and you can be alerted when those criteria are met on a daily bar. You could track 500 stocks at one time if you chose to. Okay, so this is my setup side. Remember, your left side here is always your setup side. Now, here is a great example. See how the SOS fires right there? Remember, the left side of the trade is always the final low that is made here before it starts this rally. Then you literally are asking the question, when I retest this low, do I have bullish divergence? So again, gang, this is one of the most powerful things I've ever taught. It's so simple, and yet it just works over and over. But you got to add your strength of signal. Okay, so again, what does this produce? Grab your triangle right there. Left side, setup side, oversold. Swing high produced between there. Right side, signal side, bullish divergence. There it is. Left side, setup side, overbought. Higher low. Right side, signal side, bearish divergence. There it is. Now, some of these will go further and produce a W top. Some of them will go farther and produce the M bottom. Either way, I'm primarily interested in the double top, double bottom with additional confluence, and then obviously we'd love to see this at a DSR level, at previous area of structure, support, or resistance. Now, the favorable excursion trade, and I want you to ask these questions of your own trading. Okay, so let's pull this over. So again, the primary thing that I ask all the time, tendencies. What do markets tend to do when I see this indicator do this? When I see this price action do this? Okay, and then I simply asked, what does every SOS 4, 3, 4, 5 winner look like? What do they all have in common? Well, every time I have a beautiful SOS 4 winner, here's oversold, lower high, bullish divergence, previous structure support, they all do what? If I'm a buyer right here on the right side, they all make a new structure high. And then it was common that after that impulse high was made, we'd automatically get the pullback. So we go boom, impulse, new structure high. Here's where your base verbiage comes in. After a new structure high, we anticipate the higher low. Then we look for the market to retest the previous high or make a new structure high, followed by the anticipated higher low. Then we look for a retest of the high or a new structure high. And then we bring in some basic, not Elliott wave, just basic cycle analysis. When markets move, they tend to move in cycles. After an impulse high is made, we tend to pull back to a higher low, higher low. So I wanted to be a counter trend trader at key levels of support and resistance. When I'm right, the market will make an impulse move to a new high. I get to participate in this move for profit. And then as the market pulls back right here, I look for my cluster trade to add, expecting that now that could be the beginning of a new trend. So the favorable excursion trade just saw this pattern play out. It saw the market pull down to oversold condition. Put in the double bottom. After that double bottom has been hit, the key point, gang, is this swing high that exists right between it. Okay, plenty of times I've bottomed right here. The market will come back up, test that swing high, and then roll over and go to new structure lows. So it's pretty common that I take profits on part of the position at or near that swing high. If we do make a new structure high and get that impulse, this right here is the signal leg. So this is where I take my fib retracement, left click at the low to this high, and then it's the retracement right here where my favorable excursion trade comes into play. Place a buy limit at the 618. I add to it at the 786. There's a swing low that's put in right here. See this? Very easy for me to find that swing low at 103.07 as an example. My stop goes below those lows. Right there. Okay, so A, I need an SOS 3, 4, or 5 buy signal. B, that signal has rallied and it's turned into a winner. C, I then fib that out and I look to add to the position as I buy the first pullback, or impulse wave 1, 1 to 2 retracement. I then pull in the Fibonacci 618, 786 numbers, and you can see if I buy the 618 with protective stops down here, then the value of the stop is equidistant to just a retest of whatever this high is right here. So if I buy one here, I look to cover it right here. If I buy one here, then I let this one run. And then I expect the next move to the 127 extension. Now we'll look at this in the next couple of sessions. We'll see some of these in real time. And if I come down to a 55 tick chart, we can see these typically all over the place. I'll go 89 tick right here now that we've seen the theory, and see if we have any setup just basically. Okay, let's tighten it up. Yeah, there's the volatility. So here's a pretty good example right here in crude oil. Okay, so we looked at this one today real time live. Here's our double top. RSI went overbought, higher low, bearish divergence, boom, sell them right here. So there's an SOS 4 sell. We're on the right side of a double top pattern. The market goes, it makes a new structure low, lower close here. Fib retracement goes from the signal side high, pulls down to the new structure low. Place a sell limit at the 618 retracement. We get short right here. Take partial profit on a retest of the low, and then let the balance run. Now again, this was right before our news event. So the news event occurred just after it. But again, I want you to notice that visual price pattern. Sell them here. Target attained. We make a new structure low, lower close. Outside return lower high. Sell the 618 retracement. Cover on a retest of the low. And then look for new structure lows right there. Same thing I showed on the NASDAQ. Same thing we looked at twice on that NASDAQ on that hourly chart. Okay, so SOS 3, 4, and 5. When those turn into winning trades, then watch for the favorable excursion trade. Fantastic qualified trading signal. Come in, and my suggestion would be remove all indicators from charts. So just pull in a regular chart, add in your strength of signal, and then just go look for symmetrical double tops, symmetrical double bottoms. Add your base RSI, and you'll find these things everywhere. Now again, on a base time frame, here's the left side oversold. RSI is oversold, SOS 1. Tighten the chart down. Look left. I can look left right here. Previous structure resistance, resistance, resistance. Once broken, anticipated support. Acclimate yourself to using your horizontal lines right here. Do it over and over and over. It'll become your new habit. As the market pulls back down, RSI is oversold, SOS 1. Where's the market relative to structure? I'm at a resistance zone right here, anticipated support. The market does support. I don't do anything on the left side. We pop back up. Then we pull back down. Here's a retest of the level. Do I have bullish divergence? Yes, I do. That bullish divergence produces SOS 3. Now my DSR level is set there, so there's a right side test of an SOS 4 buy signal. Buy them. Partial profit here. As the market makes a new structure high, do we break the previous swing? Yes, we do. Take your Fibonacci retracement. Go from the signal side low, pull it up to the swing high, and then look to buy the 618 retracement of that for the favorable or the 2618 entry. Again, this one right here, we did not pull back to 35.62. The lows came in at 66. Then we rally, overbought, SOS 1. Where's the market relative to? I'm at a DSR level, SOS 2. Look left, structure, SOS 3. Pull back down, retest with bearish divergence, SOS 4. Sell them. That's the winner we saw yesterday. So follow the rules of engagement. Everything starts with that extreme reading on the RSI, combining price patterns with specific rules of engagement. Any market, any time frame does not matter.